Hello, everyone. Welcome to a new episode of Blockchain Talk. I'm your host, Dimitri, and today we are going to talk a little bit about the fell down that occurred with the bankruptcy of FTX and what ripples it has brought onto the market. Naturally, we are going to highlight a few other important news items. Now, before I do that, I'm going to share a little bit of insight into the market, and with that, I mean how is Bitcoin performing. You guys see here that I have TradingView before me. You see a few indicators. Those aren't really important. That's from one of the lessons I have shared in my free Telegram channel, some insights in how the market behaves. Basically, what I was telling here was an indication of when when Terra Luna crashed, when Celsius crashed, and what the impact was of FTX, which didn't really have much Bitcoin. And as you can see, gradual descent, it's some kind of stairs being done. And each time after each crash, we see there's a little stabilization period going on. So this is Terra Luna, stabilization, crash, liquidity issues with Three Arrows Capital and Celsius Network, stabilization, a little, how to say, dead bounce, I dare say, each time that you can see it here. What's a dead bounce? Well, it is, I'm not going to say capitulation, but investors buying quickly on the down low before settlement occurs. And you can see here, long time trading sideways. And if we zoom in, this is indicated with the number 3, what FTX has done. Now, it is the collapse of a major network. You can see here quite some big volumes, even bigger than what occurred here. PSA and comes into play here with Terra Luna that has been dumped where it concerns volume. So this is all user, I'm going to say, speculation. And what we are seeing here, if you start zooming in, it's a collapse which occurred 10th of November, about 2 weeks ago. We see some sideways trading, local tests. So this is lowest level. Currently, we had the lowest level, I believe, reached at 15K 600. And we see each time a little retest. There isn't much volume going on. The entire market is in fear. However, what we are seeing is, once again, that stabilizing factor after each crash. So you might expect something like, as highlighted here, to occur. It probably currently are. Too bad that's being indicated here. Can I move it? No. Damn it. So what I want to tell you guys is that we're probably going to see something akin to this. Hopium crash down. We're probably at this stage here, lowest point. See some uptick, some recovery going on, and sideways trading, not much volume going on, and hopefully back up. However, I would not dare say that a further correction can occur, as will be seen later on. If we are going to take a look at the current crypto market, as you guys can see, there is some very small recovery going on. However, what is noticeable is here that there's some, I'm going to further zoom in here, probably wiser. I did something icky. Doesn't he want to zoom in? Nope, doesn't want to. Anyway, something buggy is happening. There we go. Zooming in here. So as you guys can see, a major sell-off has occurring, and it has everything to do with the following articles, and it relates back towards Ethereum. But you can see technically in the last 7 days, there has been some heavy sell-off going on. Now, Ethereum is linked towards Bitcoin by reason within the Ethereum Foundation, quite a lot of Bitcoin is backing the chain. And what occurred? Well, this occurred. Ethereum dips below $1,200 as FTX drainer swaps 5k Ethereum for Bitcoin. So what you guys need to know is that after the FTX collapse, funds were being drained, mainly a lot of Ethereum. And they said it is due to a hacker. A few crypto influencers might say that it's an inside job being done from FTX. However, we do not know. What we do know is that from the FTX hack, as a result of its collapse, Ethereum has been drained from their wallets. And quite frankly, as is the FTX drainer currently doing a major sell-off of all its Ethereum holdings straight into Bitcoin, mainly wrapped Bitcoin. And that's actually what this article is about. Currently, it has dumped around 6 million worth of Ethereum, or about 5,000 Ethereum, and in place bought about 357 Ren BTC, which is some kind of form of wrapped Bitcoin, Bitcoin available on the Ren network. And these are the transaction hashes that you can see. You can pause the screen. That's the hash, and you can actually verify the various addresses on how the swaps are going. So yeah, this is actually very negative news for Ethereum, as Ethereum is losing market cap due to the drain. In itself, this might be positive news for Bitcoin, as there's now a much stronger holder. However, the true winner will probably be the Ren network, something I'm going to quickly verify. Ren BTC, technically I should see, nope, it's going down still, however, much more fluctuation. Anyway, I was getting sidetracked, sorry. So yeah, someone is playing smart and starting to hold Bitcoin. However, it's a wrapped version of Bitcoin. Now, this major sell-off thus influences the Bitcoin prices. Sorry, I need to catch up again. So this major sell-off is currently holding the entire crypto market hostile, and has actually resulted in this further dipping. This one was from November 20th, so about 2 days ago. This is from yesterday, so it continues to swap Ethereum for Bitcoin. This is how much is left in the address, so there's still $200 million to go. And well, that's currently playing the markets. Next news item: FTX owes over $3 billion to 50 largest creditors. Court filing. Collapse exchange owes nearly $3.1 billion to top 50 creditors. The important part here is whom are those creditors. By reason, these creditors will need to wait for their money. And as we're in the crypto space, depending on who the creditors are, this can give major influence on the working of the entire crypto market. If, for example, Genesis is involved as being one of the debtors towards FTX, I hope I'm saying this one right, then it might be the case a few other exchanges or a few other companies become insolvent, which can impact the market further and give a small cascading effect. So now it is important to know who those 50 creditors are. Naturally, not all is bad news. Binance is currently the largest exchange still around, still present, still standing up in the crypto market. And well, on-chain data has shown that Binance has currently the largest Bitcoin reserves. Now, this is positive news for Binance and for people to establish trust in Binance. However, I would be more cautionary by saying this is good news. By reason, for a cryptocurrency project to be successful, it needs to be as decentralized and as distributed as possible. However, Binance, now having the largest Bitcoin reserves, implies that they are a whale, a Bitcoin whale. and they have the power to influence the entire market due to its enormous holdings. So for it to become healthy, it is best a few more competitors to Binance start stepping up, get their shit straight, to put it very bluntly, and allow for more and fair distribution among a variety of players. Um, I dare even say to all of you who have a Binance account and are not actively trading, now is the best time to start withdrawing your Bitcoin. You must make sure that they do not have access to your Bitcoin and that they cannot do enormous whale movements. And while people will say, yeah, but we trust Binance, they aren't like FTX, rest assured, in the background, they are indulging in the same kind of practices FTX is doing, mainly gambling with customer funds on the down low in order to remain profitable. It's what every exchange and what every financial institution does. The problem with FTX was that there were investments which had nothing to do with finance and creating profit for the company itself, be it more or less, the money made or the investments stolen from customers went straight into top management pockets and not necessarily towards the customers. That's the big difference here. So make sure to withdraw your Bitcoin from Binance. Make sure they do not remain the largest one around with the largest reserves. In order for Bitcoin to be valuable, it needs to be distributed and held by as many people as possible, and not in a centralized holding like Binance or Coinbase or whatever other exchange. DeFi NFT remains resilient despite FTX implosion, that radar. In a sense, this is quite natural. Decentralized finance has proven throughout this crash to be, well, very stable and to be working. FTX implosion, or FTX themselves, was a centralized exchange, a centralized financial institute whereby you could buy paper Bitcoin, I'm going to say, because they didn't hold any Bitcoin. And well, DeFi is really about swapping and decentralized financial services on the blockchain. So I'm not surprised that DeFi and the state of it remains unaffected. NFTs, on the other hand, while there have been plenty of news items discussing that much NFTs have lost much of their value due to them being backed by the native cryptocurrency from the blockchain on which they were minted, the NFTs being traded remains the same. Once again, has nothing to do with Bitcoin, has everything to do on how NFTs function. Same a little bit like DeFi. Do understand that FTX was a centralized exchange handing out paper Bitcoin. Traded spot BTC Bitcoin. It traded with paper Bitcoin, but it had no decent reserves. Its implosion implies that a lot of over leverage, a lot of speculation has been gone out of the market, that we are now approaching more true value of Bitcoin. There has been word of a 500 million hack against FTX. Turns out to be Bahamas regulators sizing assets. So for those who do not know, SBF or Sam Bankman-Fried is currently in the Bahamas, and well, they are doing an investigation there. The supposed 500 million hack turns out to be that the regulators are starting to seize the FTX assets and probably freezing them on the side. This is some bad news. Grayscale says no to proof of reserves. Now, currently in the cryptocurrency market, plenty of exchanges, in order to maintain trust from their customers, from their users, are providing proof of reserves. They are showing their wallet addresses and trying to prove that the actual amount of cryptocurrency they hold is conform with the amount of value they have. It's really proof of reserves, them trying to prove to you we are liquid enough. There is no over leverage going on. What we have is what we have. What we claim to have is what we have. That's basically what proof of reserves are. Plenty of exchanges are indulging into this in order to maintain trust. However, one of them, Grayscale, which actually is quite big, said no. That implies that they need, well, that they are lacking a certain amount of trust. They are not trying to convince their customers that your funds are safe and that you need to be trusted. It brings up the discussion of, do proof of reserves really matter? Yes, no. Arguments on both sides can be made. However, I see it as my responsibility as an educator to tell you guys it's always better to have your coins, if you are trading, on an exchange which has proof of reserve. You do not want to trade with leverage. You do not want to have the risk of losing your investments and all of your coins. The reserves that the exchange should have should be able to be distributed among all of its users. A lack thereof implies there is business deals of leverage going on, and that a total crash will probably result in plenty of people losing literal millions and billions of dollars. So, Grayscale, do you need to trust it? I dare say no. Naturally, they are one of the biggest whales, and there will be means to verify or to make a measure of the holdings they probably have. However, it is difficult due to anonymity and naturally, well, pinpointing which wallets belong to them. With plenty of on-chain data and research, you might probably deduce one thing or another. However, this is something to be wary about. Confidential doc revealed Genesis sought 1 billion emergency loan from investors. Another exchange hit by the FTX fallout is Genesis, meaning they are to an exchange. They too are connected towards FTX. If I'm not mistaken, they were one of the guys who loaned FTX variety of assets in order to remain afloat. However, with the FTX crash, they are indebted and in a liquidity crisis. And well, as you guys can see, they are seeking 1 billion in emergency loans. So this is another heavy blow towards the crypto market. If you are on Genesis, I suggest everyone to withdraw your coins as soon as possible, to leave it all behind, close all of your trades over there, and seek more trusted exchanges which have proof of reserve. Done. Coinbase shares reach another all-time low of $40. Naturally, with the FTX bankruptcy, Coinbase is one of those exchanges which has proof of reserve, but whose value is heavily tied with the state of the crypto market. Meaning, and I know this from experience, from being a member of the Raven Coin community, one of the things that Coinbase does in order to get listed on their platform is demanding, well, the coins of your project. With that, I mean they demand a certain share in order to put into their own wallets as a safeguard for liquidity on the platform. Naturally, if you are as decentralized and distributed as Ravencoin without a real central foundation which can call changes such as the Ethereum Foundation, well, things become more sketchy and more difficult in order to get listed, and they will look at market cap. Anyway, that on the side, what I want to say here is that Coinbase has proof of reserves, but their shares are tied to the state of the crypto market. And when you see this, it implies that the crypto market is, well, in a dire situation. Everyone knows, but it also implies that the setup of Coinbase does not really allow them to make much profits. And during this bear market, they have been letting off plenty of people already. Should you trust Coinbase? Myself, I would still say it's good for starting out if you are a beginning crypto trader. However, as soon as you have more experience, bail out. By reason, from my own experience, much of their platform is automated and service is, well, badly lacking. It was bad during the bull run, and I can assume during this bear market, with all the layoffs that occurred, it wouldn't have improved. Some might say this is some positive news. JP Morgan registers trademark for a new cryptocurrency wallet. JP Morgan is a TradFi institute, and in a certain sense, some might say this is a bullish movement, that finally TradFi, or traditional finance, is warming up towards cryptocurrency and Bitcoin. However, what I'm seeing here is a probable first step towards the introduction of central bank digital currencies, as JP Morgan is, well, still a classic financial institute. It is a little bit weird to see them developing their very own cryptocurrency wallet. It can be something good, can be something bad. I'll leave it in the middle. However, there are plenty of sides that need to be verified in order to give a proper opinion on this one. Just remember, JP Morgan is traditional finance, and for a cryptocurrency project to be successful, or cryptocurrency in general to be successful and high value, it needs to be as decentralized as possible. So, and this is a small assumption / prediction that I'm making, that cryptocurrency wallet will probably be linked towards an exchange as enhanced by JP Morgan. Do watch out, because this is the kind of setup you had with FTX. Do watch out with that one. It can be positive news. It can be disastrous on the long term. Here's some news for the Celsius network users. I put this in as a side. Bankruptcy court sets deadline for Celsius users to file claims. So the court over the bankruptcy of Celsius is now saying, look, guys, if you want to have a claim on your money back, please, you can still file a claim. Up until I didn't really with on January 3rd, 2023 being the very last date that you can file in a claim. So guys, if you have lost money with Celsius Network and were a customer or user of said platform, January 3rd, 2023 at 5 p.m. is the hard deadline. That's the deadline where you can file your claim. And with that, that's all the news I had to share. And with that, I'm going to finish up this episode. Thank you guys for watching. If you like the content I bring out, please naturally like, subscribe, or leave a comment down below. Down below in the description of the video are a variety of links with which I try to help you set up and learn about cryptocurrency. I'm present on a variety of social media, so you guys can always reach out. And with that, I'm going to say thank you all for watching, and until next time, bye.